Nothing is making sense anymore. Microsoft just beat their estimates on their quarterly earnings, but also lost $375 billion in market cap on the same day.
Microsoft and all of the ways in which they're kind of flailing and losing confidence on the part of investors.
Bill Gates is watching the empire he built take a brutal hit as Microsoft loses $357 billion overnight in one of the most shocking market collapses in years. Windows is now caught in the middle of a financial bloodbath, with investors panicking and Wall Street demanding answers. It's a ruthless reality check that's shaking the foundation of the entire tech world.
This was the second largest single-day stock decline in history, wiping an absurd $440 billion in market value from the tech giant, and the trend is still going downwards.
And this is the part where I started asking myself, what just happened?
Microsoft last night, its shares were down 10%. It lost $357 billion in market cap and had its worst session since 2020.
January 29th, 2026. Microsoft reports $81.3 billion in revenue. They beat expectations. Earnings per share, 414. Another beat. If you and I just looked at those numbers, we'd think the company crushed it. Then the stock drops nearly 10% in a single day.
This is not a company that's in danger of, running out of money. It is one that's been making choices and decisions and whose quality bar has gone down to a level where optics surrounding the company are not good.
Just like that, $357 to $375 billion in market value is gone, wiped out in hours. The market cap falls from the $3.6 trillion range to about $3.22 trillion. A few weeks later, by late February, it's hovering near $2.92 trillion, with the stock around $390 after being close to $555 not long before.
AI is no longer a free ride. We want proof that we're getting a good return on our investment.
I had to stop and think, how do you beat earnings and still get punished like that? This wasn't a bad quarter. This wasn't a scandal. This was Wall Street sending a message, and I think the message was simple. We're done clapping for AI promises. Show us the money.
Yeah, it's a trade-off between short-term and long-term. Short-term, you see that in the Azure revenue number every quarter. Longer-term, though, something like Copilot, that's a gross margin accretion cycle and a long-term monetization story that happens over multiple years.
For the last 2 years, anything with AI in the headline got a free pass. Investors didn't care about the bill. They cared about the vision. Growth was enough. Hype was enough. But now they want return on investment.
3.3% of Copilot chat users are paying money for it. So to do some rough math on that, there's about 450 million commercial Microsoft 365 seats. Only about 15 million paid Copilot seats because of that percent.
And when I looked deeper, I realized the real story wasn't the $81 billion in revenue. It was a number that barely got attention. 3.3%. That's the percentage of users actually paying for Microsoft Copilot. Microsoft has around 450 million commercial Microsoft 365 seats. Out of those, only about 15 million are paying for Copilot. That means 96.7% are not paying for the AI product that's supposed to justify this entire spending wave. That hit me.
Keep in mind that Microsoft is a multi-trillion-dollar company, so 5.37% of that is pretty significant. It's in the hundreds of billions.
Because at the same time, Microsoft spent $37.5 billion in just one quarter on AI infrastructure. That's up 66% year over year. Annualize it, and you're looking at roughly $150 billion a year. So I'm sitting there doing the math in my head. If only 3.3% are paying, how long can you keep burning at that level? That's where things get uncomfortable.
Azure's growth is even down. It dropped from 40% to 39%. The whisper number was 41%, which is what they were on the down low really hoping to hit, which is a real head scratcher.
The backbone of this entire AI push is Microsoft Azure. Azure is supposed to absorb this demand. If AI is driving everything forward, Azure growth should be accelerating. Instead, it slipped from 40% to 39%. Wall Street expected 41%. Now that may sound small, but at this scale, 1 percentage point is billions of dollars. When you're spending $37.5 billion per quarter building infrastructure, I expect growth to speed up, not cool down.
But in the eyes of investors, all of that growth ultimately doesn't matter if Microsoft is taking their revenue and their profits and pouring it back into AI, a segment that is still very uncertain in terms of its financial profitability.
So why does it feel like Microsoft is prioritizing internal AI expansion over maximizing pure cloud revenue? Then there's another layer that honestly worries me more. About 45% of Microsoft's cloud backlog is tied to OpenAI. And OpenAI is reportedly burning around $14 billion per year.
Investing tens of billions of dollars in not only building out AI infrastructure with the purchase of hardware like NVIDIA GPUs, but also they are investing in other companies like OpenAI, which Microsoft has been a huge supporter of and has already invested like dozens of billions of dollars into. But as I've reported through multiple videos in the past, OpenAI bleeds money, burns through money like no other venture. Despite making billions of dollars in revenue, that revenue pales in comparison to the expenditures involved in building the AI systems and infrastructures and data centers, as well as maintaining them, upkeeping them, as well as paying for the amount of power that they consume. Despite the massive investments that OpenAI is getting, not just from Microsoft, but also from NVIDIA, from Amazon, and whatnot, all of that investment are something that OpenAI will burn through incredibly quickly due to how much it costs to build and maintain AI, with expenditures only getting higher, exponentially higher year after year. Basically, in the eyes of investors, all of the growth that Microsoft is experiencing in certain sectors kind of goes to waste when they reinvest all of their money back into a venture that, again,
that's not a stable cash generator. That's a company running fast on funding and momentum. If OpenAI slows down or struggles, that backlog exposure suddenly looks fragile. And when I connect that to $150 billion annualized infrastructure spending, I see risk stacking on risk. And while all of this is happening, NVIDIA is pulling in roughly $51 billion per quarter from data center revenue. Every new AI server needs NVIDIA chips. Microsoft spends, NVIDIA earns. It almost feels like Microsoft is financing the gold rush while the shovel sellers are cashing in. By late February, the stock is around $392.74, down roughly 16% from recent highs near $555. Market cap around $2.92 trillion. Forward POE near 24.6, not collapsing, not cheap either. Bulls say the $625 billion backlog proves long-term strength. Bears say 3.3% adoption and $150 billion annual spending is a dangerous equation.
Even their chief financial officer, Amy Hood, boy, I'd hate to have her job right now, said, quote, "We thought we'd catch up. We're not. Demand is increasing. But if demand is so high, why is Copilot not converting? Why are only 3.3% of users paying for it?"
And when I step back, I don't see chaos. I see a shift. Investors aren't impressed by potential anymore. They're calculating the math. For years, Microsoft felt untouchable, stable, disciplined, predictable. Now it's at the center of the biggest AI spending experiment we've ever seen, and the market just showed that patience isn't unlimited. That $357 billion drop didn't happen because revenue missed. It happened because belief did. Now let me tell you where this starts to feel slightly insane. About 45% of Microsoft's cloud backlog is tied to one company. One. And that company is OpenAI. It starts to feel like an ecosystem where everyone is paying everyone else, and we're all clapping because the lights are still on.
OpenAI bleeds money, burns through money like no other venture. Despite making billions of dollars in revenue, that revenue pales in comparison to the expenditures involved in building the AI systems and infrastructures and data centers.
But what happens if OpenAI slows down, or restructures, or investors get cautious? Suddenly, that 45% backlog doesn't look like guaranteed growth. It looks like concentrated risk, and that's where the humor turns dark. Microsoft might be spending billions to support a partner that might not even survive long enough to justify it. For a company that felt untouchable for decades, this is its worst drop since 2020. Not because Windows broke, not because revenue collapsed, but because belief shifted. Even when you bring up Bill Gates, the symbolism hits harder. This is the company he built into a fortress. And now that fortress is being tested by math, and if this feels familiar, it should. This was the second largest wipeout since NVIDIA's infamous 2025 plunge, what some called the DeepSeek shock. That moment was the first time investors realized AI expectations might be inflated.
Or, Microsoft's entire computing segment being down by 3%, according to Windows Central, are some key aspects of all of this, but it actually has more to do with Microsoft's commitment to artificial intelligence.
Now we're seeing a pattern. Big tech names wobble together. Alphabet takes hits. NVIDIA swings violently. Microsoft gets repriced. This isn't a dramatic bubble pop with fireworks and headlines screaming collapse. It's structural. It's quieter. It's the slow reset of expectations.
As impressive as AI is, it's also extremely unreliable on multiple fronts. Like, it's just not a perfect technology for it to be put out in a way where it's almost advertised like it's a finished product.
And I think Wall Street just relearned a lesson it forgot during the AI hype cycle. You cannot spend your way to profitability. You just can't. Capital efficiency matters again. Growth has to convert into cash flow. Investors want monetization proof, not demos, not potential, not early innings. If 96.7% of Copilot users aren't paying, that's not a rounding issue. That's a business model question. So I start asking something bigger. Why push AI so aggressively before maximizing the thing that already works? Microsoft historically dominated enterprise software. Then it dominated cloud. Microsoft Azure is already a cash machine. Cloud compute demand is real. Companies pay for it every single day. So why does it feel like the AI Copilot experiment is being prioritized over pure Azure expansion? Is internal AI investment cannibalizing external cloud momentum?
With this Microsoft situation going on, because they're a publicly traded company, they have more reporting standards and accountability.
Is this a visionary move that looks expensive now, but brilliant later? Or is this a classic case of putting the cart before the horse? And here's the uncomfortable part. Public companies have to show the math every quarter. Private AI firms can tell stories. They can raise funding. They can adjust narratives. Microsoft can't hide. Massive capex, slowing cloud growth, low AI adoption, valuation compression. Those are facts on a balance sheet. That's why Microsoft might be the first visible crack in what people are starting to whisper is an AI bubble reset. Notice I'm not saying collapse. I'm saying reset. Because bubbles don't always explode with noise. Sometimes they deflate slowly as reality sets in. And if this is the first domino, it won't look dramatic at first. It'll look like earnings beats followed by stock drops. It'll look like strong revenue paired with investor skepticism. It'll look exactly like this. The AI dream isn't dead, but the free ride? That might be over. And now the math is in charge.